This is MyStockScanner Live December edition. Year-end rallies, tax laws, moves, and holiday headlines. We'll break it all down with the three-point playbook, that playbook that dictates that we put our stocks to the test: quality, upside, and timing. I put these two men to the test every single day. Liam Flavell and Hans-Henrik Nielsen, they're the guys with the answers. And if you have any questions, then do send us them at our mail, fomo@mystockscanner.com. My name is Jesper Behrens, and I asked a question. First one for you, Hans-Henrik. On my calendar, it says that we get some job numbers from the USA today. There's been a bit of uncertainty if we get numbers or not. How about these numbers? Do we get them?
Oh yes, definitely. Though these are the ADP numbers. It's a private organization, and we definitely get them. It's very interesting.
We will get into those numbers when they're out later today. I'm sure Hans-Henrik will be looking at them just like he looks at every news, and you can follow him in the mornings with the market scan that he puts out just before 9 o'clock, and I'm sure those numbers will be in there tomorrow. Liam, we are serving a triple burger. It's not because we are that famine-stricken at all, but it's a triple burger with CrowdStrike, Marvell, and Pure Storage. Is there any meat in that burger?
There is a lot of meat in that burger. Lots of green meat, actually, but the green is good. So
okay, green is good for all of us. And apart from that triple burger from Liam, we are looking into your guess on how the fluctuating Bitcoin will end this year, because we asked you in the Tuesday poll in our So Me, and we'll tell you the result of that poll later in the show, and also looking into Bitcoin in general. And let's just say that Liam and Henrik weren't too positive in regards to Bitcoin. We'll get back to that. ISS plunged yesterday, and Shape Robotics did a U-turn. One day it was 50% down, the next one it was up, and that was yesterday, 50%. We look at the reasons behind. Also on our program, we'll look to Procter & Gamble, or P&G, as they are called, as they can be an indicator to how the American consumer is doing. And let's just say they're not happy. P&G, that is. I'm pretty sure you would be happy if you had $5.3 billion. That's today's number, and who's the owner of such an amount of money, or wealth, if you want. We'll tell you at the end of the show. But first, let's get into the first part of it, because Bitcoin has been really unstable lately. It's been going down, 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 and yesterday it came up again. Liam, we'll tell about how our users will guess the year end, but right now, what's going on with Bitcoin today?
Today it's up 1.8%, something like that. So yeah, it's not too bad. It's stopped going down. Basically, that's the main reason why it's not going down anymore. There's no real news. I think people just looked at it and said, okay, it's had quite a large rundown. What you can see here from our chart, the regular sort of viewers and readers of what we do know that we use this 50-day, this green line here, 50-day moving average. So that's the average of the last 50-day closing prices, as a real way of telling whether a stock is in an uptrend or not. And it's been in a downtrend, I'd say, since October. You could actually say it's sort of been using the green line as a bit of resistance since August. So yeah, not a happy sight. It coming up, if it can carry on going up and then drop back down and then go back up again, go above the 50, then maybe it's in an uptrend. Maybe that's a good thing for the rest of the indices and the rest of the markets.
We shall see how it's going to end the year, because we asked you guys who are watching us right now how you were predicting that it's going to end up. Interesting answers in our 3 different groups on our social medias. One thing that we do know something about is the rate cut worldwide or not, in that sense that Hans-Henrik, you had it on the market scan this morning, looking into EU and saying, no rate cut for Europe right now. Different story about the US. Where are we heading with the rate cuts?
Well, if you're looking at EU, there is the ECB, the central bank in Europe, that is deciding them, and they have kind of indicated that there'll be no more rate cuts right now. Looking at the inflation numbers that came out for November yesterday, inflation at 2.2 it could indicate that we wouldn't see any rate cuts this year. However, if we look at month over month, this is the inflation every single month. So a year's inflation is the sum of every month's inflation. And we can see that here in February, March, and April, there are some very large prints that are dropping out of the calculation. That means when we get to February, March, and April 2026, these will no longer be calculated, which means that the inflation will probably drop quite a lot. So my guess is in the first half of 2026, we might see some rate cuts from ECB again.
Oh, that's gonna be interesting because, of course.
Could I just add one thing in that, please? It's just that's a really interesting search history you've got there on the ads.
Oh, let's see, cat and chess.
Sorry, carry on.
No idea what that is.
Yeah.
Chess, though.
Careful what screens that you are sharing on this show. I'll hurry up and ask you, Hans-Henrik, in regards to, because of course people who own their houses or their flats or apartments, that would be good news if ECB is going to down the rates.
Yes, as a rule of thumb, it is actually later years. It's kind of the Danish, for instance, the real estate market have looked a bit more towards the US interest rates. But they are diverging somewhat, and we know the Danish National Bank are mimicking the ECB interest rate. So yes, if they lower the interest rates sometimes next year, which I assume they will, because we have a really crappy economy in Europe, we need some stimulation. So I think it will come in the first half, but that is just my guess.
And super short here at the end, we of course know that we are counting down towards the Fed taking the decision about a rate cut in December in the US. Everybody's kind of saying it's a shoe-in. Yes or no? Is it a shoe-in? Do we get a rate cut?
I guess we will. But right now, the market is pricing in almost 90% probability, and they are usually right this close to the decision.
Okay, I hope you guys are hungry, because now it is here, the triple burger that we talked about in the beginning of the show. Liam, you're up with this one because we're in the tech industry. Yesterday, numbers from CrowdStrike, Marvell, and Pure Storage, and even though they're not related, they're kind of related. But my goodness, did they go in different directions during the sort of, one thing was in the market and then after the market? Tell us all about it.
Yeah, it was an interesting evening last night. You had Pure Storage going up when it announced its values and came down 11% or something like that. Yeah, so it's all over the place. And what we always say to people is that when these things happen, it's often because investors hit their point that they wanted to. They were aiming to come out straight after earnings because that's what they were investing into. So it's part of their strategy. So just because it drops a little bit or goes up a little bit doesn't really change our view on the stock too much. What we look for is afterwards. Also remember that we never go into a stock just before earnings. We normally want at least 2 weeks before that. So then that's why, because we avoid this sort of volatility. If I take them one by one, they're all quite compelling cases, actually. They're all IT stocks. So CrowdStrike was responsible for quite a large outage last year, and if you look at the chart, you can see it dropped all the way down here back in March or February last year. It dropped, and this year as well. It was this one?
Yeah, it was before
August last year. So it's a bit of a roller coaster ride with them. But from a playbook point of view, if I just do a very quick analysis, because the earnings aren't quite as good historically, you've got some losses in the past. The quality score isn't quite up there, but you can see the increase in earnings coming in 2026, 2027. The analyst estimates are looking very, very good. The PEG, because it was a loss last year, we haven't got a PEG ratio. Everything else looks pretty good. There's some issue with some data over the interest in there or the debt levels, but I'm sure that's not too bad. So it's not a bad stock. And if we drop down to the valuations very quickly, so quality stock, yeah, just about for a stock that's tech and only just starting to make a profit. When you look at these valuations, you can see that if I move these around and maybe just reset the base case in between there, so you can see my three cases here. The best case scenario I've matched to the top of the most recent sort of peak. The worst case scenario in red I've matched to the lowest point recently, and the blue is just in between. And the analysts are coming back a bit. They're only up 3.5%, they think, by the end of next year for the stock. We think slightly differently. If it carries on with these earnings and can keep a PE ratio of 186, it's worth damn sight more.
But
however,
Liam,
that's the thing.
Can I ask you in regards to that? Because a number like that, 186, sounds Tesla-like. and there we don't necessarily like it. So why do we like it here?
Well, that's simply because what we're doing is we're actually just matching what history has, what investors have paid for in history. So you can see here that investors have paid way over the asking price compared to earnings that the company's brought out. They're going back. So it's always been very, very overvalued. And that overvaluation is just increasing at the moment. The reason for that is CrowdStrike are a big antivirus security stock that helps protect some of the biggest hyperscalers out there. And obviously everyone's putting in AI data centers at the moment. Everyone needs the biggest and the best, and that's what CrowdStrike pretty much are. I wouldn't actually go into it based on those PEs. We did last year. We made some money out of it last year, but we've got other things that we can go into at the moment. Very quickly on the other side of things, Marvell, a similar sort of case. Marvell, they popped 10% last night. They've and the main reason is their returns were okay. Their earnings were okay yesterday, but they bought an AI company, so obviously that means a 10% bump in their valuation of the stock. Why wouldn't you? But they basically design chips, and they're getting more into the AI side of things. Their real sort of art that they do is actually create networking between different data centers and different operations within data centers. So from an earnings point of view, similar to CrowdStrike, the analysts think they're going up. Similar to CrowdStrike, they haven't made any money in the last few years, so everyone thinks they're going to. That's a bit of a red flag for us. From an earnings point of view, you can see just very quickly, you got up to 72% at the top end and 31.4%. And that is actually on more reasonable price earnings ratios of 47, 40 and 36. So that's probably a bit more palatable, and we'd certainly look at that. And our entry signs here on the 3-point playbook are green now because we're above the 50-day, and our MTI and our TPIs are all green, so that's a pretty good one. And then lastly, very quickly, Pure Storage. They're a storage company. I wrote about RAM and storage a couple of weeks ago, and how the prices are just exponentially going up. You can see similar story. They have actually made some money, so that's quite a rarity in some of these stocks that we're looking at the moment. Everything is green on the playbook, and the quality score is 84, so a fantastic stock. And from an upside point of view, you've got a PE's maybe a little bit less reasonable at 64 to 45, but you're looking at a potential of 18 to 68% return in the stock if investors are carrying on willing to pay this. These are the guys that dropped 11%, so they're going to open down here, and we'll just see whether the 50-day keeps as a support point for us. If it does, it might well be a buy.
It might be a buy, so that's almost a buy the dip situation if that should happen.
That's 11% is not a huge dip, but
let's call it a dent. It's a buy the dent situation.
That's it. By the chin.
Yeah, exactly. So much for the triple burger that we had here. But if you're not seasick yet of the graphs going up and down here, I'm sure that we will make you a little bit seasick here, because now we're talking Danish stocks, and we had a couple that sort of were outliers yesterday. ISS plunged almost 8% after the news came out that they are supporting the launch into an investigation in regards to Hong Kong apartment fires. And Shape Robotics gained 50% after losing 50%. Let's start with Shape, just because that was a massive hike and a massive drop. And there might be somebody sitting out there who's never invested in stocks going to say 50% down one day, 50% up the same next day, we're back. But we're not. That's not how it's done.
You would think so. First of all, Shape Robotics is a complete mess. We looked at it quickly the other day in our 3-point playbook. We wouldn't touch it with a 10-foot pole. Just on the technical side of it, we would have gotten out up here around 30 something and wouldn't have been in it. So that is absolutely not a stock for us. There's a lot of mess there. There was a security thing for some of their credit, some of the loans that were withdrawn. They were basically bankrupt one day when they dropped 53%, and then they were kind of saved, and board members are dropping out. And so 50% down, that means you're going down here, and 50% up from here, meaning you're only halfway up. if a stock drops 50%, you need 100% up to regain. So Shape Robotics, absolutely not something we would touch. ISS is a bit of a you could say more interesting case, because we have actually had several buy signals on that over time. We have been in a swing trade. We announced here somewhere. The thing is, there was this terrible tragic fire out in where was it?
Hong Kong,
yeah, where a lot of people died, and all of a sudden the ISS were assumed being a part of that responsibility for fire alarms and fire controls and so on. However, what they are saying right now to their major to some of the big banks, Goldman Sachs and Morgan Stanley and so on, is that their involvement in the tendering process were administrative, did not make any recommendations or decision making. So right now they're doing some sort of court thing out there to decide that, and ISS is saying, well, we're welcoming that. They have to say that, but I think this is we don't invest in something like that. If we look very quickly at ISS here, it's actually very green on our on just our quality score here. On the value graph, it seems like it has been. Don't worry, the analysts don't think it should go down 100%. We just don't have an analyst number here. So it does look fairly well, but as you can see, it has been all over the place as PE goes. So it's hard to say exactly where PE should be. However, we never buy on these situations because you never know what comes out of this. It could be that they say out there, yeah, ISS is to blame, then it drops 50%. So we normally wait till larger decisions are made on this regard. So we're not buying.
In that sense, we're a little bit like Warren Buffett. We like stocks that don't make too much noise, really.
Yeah.
We just want nice and calm. Let's stick with that as a theme in that sense, because something that makes a lot of noise and jumps all over the place, Bitcoin. We asked our members and our users on our platforms yesterday in regards to come up with a crystal ball and look into the future, look into where it's going to be at the year end. And if I look around the different groups, let's start with the big one, the broad one, where I'm going to say everybody is at. That's ActionSnack. In there, 36% of the members, that's 4 out of 10, says that they believe it's going to be between 100 or 90 and 100. 18% set between 60 and 70. If you go to Action Illusion, our second group, they had 31% very bullish, over 110, and 18% at 70 to 80,000 for a Bitcoin. Our members that counts for, they're a little more reserved. Should we say that? Put it that way?
Pessimistic?
Pessimistic, we can say that. Maybe it's because you guys said, where did you say it was going to be at 0 next year? Or what?
18,000.
But our member says between 60 and 70,000, and 22%, that's a split between 70 and 80,000 and 90 and 100. Guys, what to make of this? People, they really don't know where to put it. It's a good question
if they are pessimistic or realistic. But however, what we are teaching our members is to buy stuff that have quality and good earnings and so on. And Bitcoin, just have to say, no matter, it could go to $1 million. I know. There's just any intrinsic value in it. It's not making money. It's a bit like gold. It's just sitting there. So yes, it could go to $1 million, and there is a definite amount of it, and so on. But yeah,
Liam, what do you think? Are you being swayed by our members and getting a little more optimistic on the Bitcoin?
It's got value in it that people prescribe to it. That's the key thing about these things. And it's what's the difference between that and the dollar? At the end of the day, the dollar is a green piece of paper that you can exchange for something else, and people get very annoyed and angry about it moving around out of their pockets. To be honest, I hope it is at 110, because that means risk on stocks will be better off generally. So that's what we use it for here, is a barometer of what's going on in the market.
Yeah. I always loved about the Bitcoin that people say it's something totally new, and then they value it by something like the dollar, because not that new, so It has to lean against something old. But let's move on, because we have a stock that we want to talk about in regards to Black Friday, was something that hans-henrik wrote about in the market scan this morning, was the numbers that came out after Black Friday, especially in the US. We're not talking Denmark here, but we're talking the US. And hans-henrik, Black Friday, it looked like it was a sound success in the US. Numbers going up, but you say, not so fast, Jimmy.
Yeah, well, it's not me saying it, actually. It's basically everyone looking at the numbers, because yes, overall Black Friday spending were up somewhere, depending on who counts it, somewhere between 7, 8, 9% or up to 11. However, it was actually only 1% more stuff that was bought. The volume of goods were only up 1%. And then the prices had gone up 7, 8, 9%. So there's a lot of inflation in there. Also, a thing that really worries us are that when you look at how much is bought on credit, we can see that almost 2/3 of the goods that were bought on Black Friday, especially the online part, were bought on credit that people were not planning or thinking they were able of paying back within a month. Meaning that, yes, they are spending more, especially because there is inflation, but they're not spending their own money. They're borrowing money, and the credit card debt right now is at 18 to 20% interest rate. So this is not good news.
Oh, it sounds like America, though. Buying
Well,
things that they can't really afford, and of course it is. But let's just zoom in, because there was an interesting number not hidden in there, but something that you flagged right away, and that was P&G, Procter and Gamble. And the reason why they're interesting is because they are one of the biggest sellers of things that we need all the time, whether it be toilet paper, diapers, shaving material, toothpaste, what have you. That's what they sell.
Yeah. So these are the necessities, basically. This is stuff that people normally tend to buy no matter what, or at least it's one of the more stable. It's not like a new television screen that you can postpone, or a new car. This is actually stuff you buy for your household. And they are reporting quite a large drop in sales. They are saying, though, that their guidance will keep up. We'll have to see about that. Overall, it's a good quality company. It's one that where we would say, yeah, it checks out. PEG ratio is just at the high end, but good quality. And if we just go into our value chart here, we can also see, we can have the tops and the bottoms here and see, yeah, they are actually at the bottom where they normally tend to come up from. So it's not a bad call right now, but with US consumers, even at these necessities, saying, we'll hold a bit back, that is what worries us a bit. Also with the tariff war, where we have been saying the effect will come in the first half of next year.
But Liam and hans-henrik, when I'm looking at stuff like this, what they're selling, this is things that people really need, unless they're going to grow a Santa Claus beard or something like that. This is Gillette. This is all kinds of things that they really need.
You can always make a razor go a little bit longer. You can always, maybe not toilet paper. That's
use your toilet paper twice. And
but you can cut back, and even a 5-10% hit on their sales just drops down to the bottom line, affects their guidance, affects their earnings, and suddenly the company's not as valuable as we thought.
And what we have to remember is that the Western world, but especially USA, is built on the concept of growth. Consumers have to grow their consumption every year. So when they start to cut back, it hits the bottom lines and the stock prices fairly quickly.
I tell you what, Steven Spielberg is not a guy who's going to cut back. He is the guy with the number of the day, in that sense that his wealth, or his accounted money, fully accounted, is $5.3 billion. That makes him one of the world's, if not the world's, richest celebrity. Number 2 on that list is George Lucas, the guy behind Star Wars. $5.1 billion. Michael Jordan, a basketball player involved in Nike and what have you. 3.5. Oprah Winfrey is 3 billion. And if we look further down, we can catch Taylor Swift at number 9. She has $1.6 billion, a little bit more than the three of us put together have.
Well, but Liam, he was number 12, wasn't he?
Yeah, I think so. I can see, but he's cutting back on the shaving kit. I can see that right now. But just before we go, we have some things looking forward to the rest of the week. We're going to broadcast again on Friday, so come back at noon and see our Friday show. And one of the things I'm sure we will be talking about, Liam, is Salesforce. This is I won't call it an enigma, but a weird stock in that sense that they were the darling of everybody, and then AI kind of knocked them down a little bit. But they're coming with earnings today. What are we expecting?
I'm expecting some fairly good numbers, and what the subtext to all of this is that AI was going to eat the software companies' lunches. It hasn't. It's not good enough to do that. Probably won't be for quite a while yet. So they're still a going force, and they're probably a little bit on sale because they've dropped a bit in the last 12 months.
Oh, it could sound like it's a stock that we should be looking at. We're not buying into earnings. We always say that. So who knows? We might bring it up on Friday. Hans-Henrik, I'm looking to you now. The reason for it is that we tomorrow get numbers from Kroger, one of the big supermarket chains in the US, but also Dollar General, and that is really one of the cheap stores in the US. Is it that where we can see something about the poor and not so well off American, how they're doing?
Yeah, definitely. I think, tied up to the Black Friday, where the consumers are in a bad shape, at least 80% of them in US, I suspect those cheaper stores will do fairly well, because we can see there have been a movement toward the cheap end of the stock or the goods.
Yeah. Another number that we'll get on Friday is Victoria's Secret, and there we will see if people are turning over their panties and using them twice, if that number goes down. Liam, why are you looking like that? And again, I will say to our users, the way that we are sort of situated in the pictures here is nothing to do with the Liam stock being down, that he's a little bit lower and Hans-Henrik is a little higher. My hair on its own is running away from here. Thanks for joining us for this December market stretch that we're in. Clarity today, confidence tomorrow, and a stronger year ahead. That's what we're trying to give you guys. So do use the 3-point playbook. It's quality, upside, and timing. That's how our playbook dictates that we put our stocks into the test before we buy them. As said, we'll be back on Friday at noon with Friday's face-off, stock of the day, and much more. Until then, happy investing. See you guys.